You are tuning into the LEHI, Low Ego, High Impact Mindset podcast. I'm your host, Volkan Emre, along with a dynamic team of Kellogg School of Management alums. We are here on a shared mission to uncover the mindset that drives impact and success. On LEHI, we have thought-provoking conversations with incredibly successful entrepreneurs, business leaders, and investors from around the globe. We uncover the mindset that drives them, allowing them to make a high impact without losing themselves to ego. Now, let's get started with today's episode. Hi from Bangalore, India. Today, Kostas Poulakidas and myself are hosting Anant Vidur Puri, a technology and entrepreneurship enthusiast who is a partner at Bessemer Venture Partners India branch. Bessemer is one of the world's leading venture capital companies with more than 135 IPOs and 200 portfolio companies in the enterprise, consumer, and healthcare spaces. We are recording this podcast in Bessemer's Bangalore office in India. Anant, thank you very much for hosting us at your office on this holiday day in India. We really appreciate it, and it's great to have this discussion with you. Thanks.
No, thank you so much for having me. And I do want to call out, this is the best name for a podcast that I've ever seen. Really excited to be on this. Low ego, high impact. I like that.
Great to hear.
No, of course. And I think just in my line of work, when you're working with entrepreneurs, I think the best part of this role and my job, and one of the reasons I like to do this so much, is that you get this unique opportunity that when an entrepreneur is building their business out, it's what they're doing, it's their passion, it's their dream. And they allow you as an external, person, like who's not really involved in their life or their business prior to giving them money, to get a ringside view of that business, basically be on that journey with them while they're building out their dream, building out their passion. And that is such a unique spot to be in.
Yeah.
It's like saying that somebody gave birth to a baby and they're like, hey, you're not the parent. You're like a distant aunt, but we'll make sure you see everything that the child does, grows up, learns everything. And that's such a unique, point of view to be in. And you have to have low ego. Like you can't succeed in this role if you have a high ego, in my opinion.
Yeah, I think it's very difficult.
We had a great entry. Normally, we have some warm-up questions to get you
but we should still do
better, but we still can do it.
Oh, you need to do the warm-up
I'm looking forward to the warm-up questions.
Yeah, so the tradition for any new listeners that we have is we have our traditional warm-up questions, and not only do we hope that you find them enjoyable to listen to, but also I think the answers to these questions maybe also speak a lot into someone's mindset, right? Into how they think and what they enjoy and what they like.
Yep.
So we'll let the listeners decide, but Volkan, why don't you start off the questions?
Okay. Coffee or tea?
Tea.
Dogs or cats?
Can I say neither? I'm a little afraid of pets.
Fish. Yeah.
Mountains or beaches?
Mountains. Always mountains.
Text or call?
Call. There's so much context. There's so much emotion that gets lost in a text. It's always call.
Yeah.
Nice. Music or podcasts?
Music.
PC or Mac?
PC. I tried using a Mac. I think I'm not smart enough to use a Mac, so I stick to PC.
Drive or fly?
I like flying.
I don't blame you.
Yeah.
What's worse, dishes or laundry?
I think washing the... So the thing is, the laundry machine does most of the job, but then folding the laundry is what really makes it complicated.
What? That's the back end that gets you.
Yes, exactly.
I never would have thought about that.
The process, yeah. What's the first app you open when you start your day?
So I actually open my personal I open my personal app. It's like my WhatsApp, but I don't see like the messages. So we have a family group. The first thing which I do on my phone is I go to the group, I look at the picture. It has like me, my parents, my wife, everyone. So that's the first thing I do in the morning, every morning, because I feel if you see the people who are most important to you in the morning, your day generally goes slightly better. So that's what I do.
That's actually a great idea.
Yeah.
Yeah.
Always look at I look at my wife when I wake up because she's like right next to me. But then I open the app and I'm like, I don't read any text messages or anything. I just go to the group. I click on the group picture. I see my family, and that's the best way to start my day.
Yeah. I agree. So let's dive into what you do. What the firm does.
Yes.
Could you give us a little bit about your background and also what the firm does and how you're involved?
Sure. So I joined Bessemer back in 2014, and like this will be a slightly long answer because the story of how I came here, and then I'll get into what we do. But the story of how I came here is also, I think, interesting. So if you think back, like if you were in India in that time, in around June 2014, it was very unique because 2014 was the first year when we had this whole large mega venture capital round. So like you had funds like SoftBank and Tiger and Kotu and Naspers and name any large growth equity fund. And you had the first of these unicorns getting created. You had Snapdeal, you had Ola, you had a couple of other companies as well. And there was just so much exuberance in the ecosystem. And I graduated from this university in India called Indian Institute of Technology, IIT. And if you've heard anything about the IITs, it's that a lot of IIT graduates go on to start companies.
It's an exceptional school in India.
It is. It's a great school. It's a great school. So I was at IIT in New Delhi, and a lot of my batchmates, a lot of people around me were starting companies. And I was in consulting. And I loved consulting, but then it's not as exciting as starting something of your own. And I would see all of these classmates or people, like maybe 1 year above me, and they were all kind of starting companies. And I was like, damn, I don't have any great ideas. Like, what do I start? And I was like, okay, I don't know what to start, but let me be close to these people. Let's figure out a way to be close to to all these people. And that's when I learned what venture capital is. Because I was like, okay, this is great. So I can be close to entrepreneurs, don't have to start something myself. And then over time, I learned something. So that's why I started to think about joining VC. And then the role with this firm came along. And the interesting thing about the firm at that time, if you think about 2014 was, and even today, as a firm, we're a very tight-knit, closed firm. So across the world, we have around 25 odd partners. And then we have, typically we work in an apprenticeship model. So every partner will have like an associate. And then there's a common pool of analysts who work with all the partners and the associates. So what that means is the teams are always very lean. And if you think about it, we're currently managing, I want to say around 10 billion or so, a number like that in assets. And we have a team of like maybe less than 100 investing people trying to do it. And that's a very lean team structure. What that means is if you're a young analyst joining venture capital, you get a ringside view into a lot of things. So you have a lot more ownership, a lot more, things you can do, learn. You're not just, buying coffee for people or anything. You're actually doing the work. And that's what really attracted me to this firm, because I was like, hey, if I am at BVP, if I'm here, I'll actually do a lot more than I can do if I'm at, some other firm. Because it was like a 3-member team when I joined. I was the 4th person. So imagine being the 4th person of a venture capital firm. And I got so much great access. And that's how I came into VC. That's a little bit about my background as well. And I think my first day at my job was quite interesting. And I always tell the story. So my first day, I came into this office, exactly this office.
Yeah.
And there was nobody in office. Because it's a 3-people team and I was the 4th person and there was nobody in office because here's what happened. One of the other partners, he was out for some meeting. So he was actually just like, he was doing his work. 2 other people, the 2 other VPs at that time, they were both independently, separately having their own kids that same day. So on that same day, my first day of work at Bessemer in Bangalore, the 2 VPs in the team were independently with their own kind of like in their own families having their own babies, and there was nobody in office, so I didn't know what to do. I was like, okay, I was told I have to reach out to entrepreneurs. So I sent, I think, 22, 23 emails because I was like, okay, these are the most exciting companies. I think let me just drop them all an email. And I still remember 3 people replied on the same day. And that told me a lot about the power that of the brand that this firm has. So as the firm, we are actually over 100 years old. The firm actually started in 1911. We've been doing investing since then. The name of the firm that is, comes from the Bessemerization of steel process, if you've heard of that.
Yep.
That process was kind of, developed by a person whose last name was the name of the firm. That is, I think he was something, and his last name was like Bessemer. And he came up with that process, and that process made Carnegie Steel the lowest cost steel manufacturer, which made them a very large steel manufacturer. And Henry Phipps, one of the co-founders, made a bunch of money, and then he put that money into this kind of trust fund kind of stuff, and that became what BVP is today. And so there's a very storied history, and because of that, I emailed 22 people, and 3 of them replied on the same day within like 5 hours. And I remember I was like, okay, can we do a call today? And they were like, yeah. And I did a call, and that's when I realized, and I was talking about this, that these people answered every question that I asked them. Like I was like, oh, so when did you start? Why did you start this? Why did you choose this as your, core customer segment? Oh, who was your first customer? Where did your first kind of dollar of money come from? And they answered everything. And I was like, wow, like I literally am a new person on this job. I have no idea. I have never met these people. I don't know anything about their business. And they're giving me every single detail. And that's, why I say that when you're in venture capital, especially if you're in a firm like BVP, you have this kind of responsibility because founders will, give you a lot of attention. They will answer every question you ask them. They will value everything you say. And you have to be really responsible what you do with that attention. Like you have to remember that it's their business. Sure. We like to say that we are invited guests to any company that we invest in. So they allow us to be there. We don't have any right to be there. And yeah, like the reason I went into that entire detail, I know you just asked me one very small question, but the reason I went into that was because that's a large part why I joined the firm in 2014. I left them in between to go to my, business school degree. And then I came back again because I was like, this is such a great place to work. This is such a great opportunity you have. I love working with the people here. Really enjoy what I'm doing.
There's another detail about your background that I also find interesting. Volkan and I are here. We're in India.
Right.
It's been incredible. We were in Delhi. Now we're in Bangalore. And, we're fortunate to be a part of the Kellogg School of Management at Northwestern's program that allows us to come over here and study and focus on India tech and all the things that are going on in India. And, I was talking to you earlier, and in many ways, this experience has been, I feel like I've come to India and I've seen the future, right? So, with your background, maybe if you would have studied, you went to Harvard and then you came to India.
Yes.
Maybe if you would have studied a little harder, you would have been able to go into to
if only, yes.
Yes, if only, if only. Anyway, but no, I mean, you went to Harvard Business School.
Yes.
And you came to India. You could have probably gone, any place.
Including Bessemer in the US.
Right.
Yes.
Right. I mean, I'm making some assumptions, but
yes. No, that's right.
Right.
That's right.
Yeah. So why? Did you have a crystal ball that you knew that this was coming, or what was the motivation? What was that thought that says, I'm coming home?
Yes, there were 3 different dimensions of reasons. So one was just pure, the US is a 2 to 3% growth economy. India is a 6 to 8% growth economy. If you take a 10, 20-year view, there's going to be a lot more value generation in this part of the world. That, the US already has had a lot of great value generation, but India is a little bit earlier in its journey. So that was like the pure economical reason that, hey, it's more likely that you'll make more returns as an investor if you're in this part of the world because the returns are just higher. The economy is growing faster. But that was, I think, the more logical way of thinking. I think the more emotional way of thinking was I I feel that investing is such a people's business, and it's got, like, you need a lot of context. When I, talk to an entrepreneur in India, I don't just want to know that, oh, what's your business? I want to know, where did you grow up? Why do you make the, choices that you did? Why did you, decide to go study here or, go work there? And I can understand a lot about them as a person when I hear those answers. If I do that same thing in the US, I just don't have that context. And that's the honest reason. I don't think I'll be as good of an investor in the US as I am here in India, just because I understand Indian people better because I grew up here and I live here. And the third reason was that, look, I think we spend 8 to 10 hours of our day at work, 5 days a week. So it's a considerable part of your life. And you want to spend that at a place where you like spending time. And I've heard so many stories about people who are like, oh, I don't like my workplace, I don't like my manager, I don't like blah, 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 blah. And I remember that I really missed this office when I went to business school. Like, I remember my last day before I went to business school, I was talking to our legal counsel, and he was like, so are you like excited that work is done? I'm like, no, I'm actually feeling a little bit bad that I won't know what you're all doing in the next 2 years. And I realized that's such a unique feeling. I didn't want to live, there was no way I was going to leave that. If I found a place where I like the people, I like the firm, it's fine. Just stay there. I think that's the optimization I did. So those were the 3 reasons.
That's great. That's great.
So one question, like, we are mid-career professionals at Kellogg's Executive MBA program. And we have surrounded by really brilliant Indian immigrant tech leaders. And but they belong to a different generation. Like, India currently has a population of like 60% of the population is age 35 and below.
Yes.
And 50% of the population is aged like 25 and below.
Yes.
And you have a different generation with a very high confidence.
Yep.
And it seems that there has been like a shift in the confidence of Indian youth.
Yep.
And we have been observing like there's a possible reflection of the shift in confidence to the entrepreneurial scene and ecosystem. What would be like your comments on that trend? And do you see any risks in terms of like the sustainability of that? The number of people we are having in India in terms of like being employed and keeping their hopes up, and potentially having like any risk for potentially an erosion like in that particular risk in the short and long term future. Sort of, if the question is too long, but the confidence needs to be kept up to give hope to hundreds of millions of people, and there may be some challenges.
Yeah. So I think the heart of, so I think there's 2 parts to what you said. One is this sense of confidence that the new generation has, that we can be world beaters. We can do whatever we want. We can go get whatever we want. I think that's part one. And part two is, so A, why is that happening? Why is this different in this generation? And second is, can it be sustained? Like, is there enough, meat behind it? It should not be false confidence, right? So I think the first part, why is that, the generation of people who were born in the 90s, I think, or like after 85, 88, they have seen an India which has opened up economically. Like 1991 was the great kind of, was a big kind of, it was a watershed moment when we opened up our economy to a lot of FDI, a lot of, capital from many different, parts of the world. And so this generation grew up in a world where globalization was the norm, as opposed to the prior generation, which grew up in a world which was, just kind of getting independence, just finding their feet. And so this new generation is like, hey, we saw global products and global brands and global people coming into our country the day we were born. So they just, it's very natural for them to assume that they can also do the same thing. And the reason you see a lot of Indian immigrants everywhere is because they're like, hey, people can come and sell stuff here. We can go and sell stuff there. And that's really the philosophical source of that confidence, as per me. And now, can that be sustained? I think I think yes. And the reason for that is, look, depending on which, and I'll probably cite this fact 2 times again, but depending on which economist you believe, we're between a 6 to 8% growth economy. And when you're a 6 to 8% growth economy, you're adding at the scale of the economy that we are, which is around, between, I think, close to around 3 trillion, is the last number. You're basically adding, close to like 150 billion, like 160 to 250 billion dollars of GDP every year. And if you think of the people that you have, that is a large number. You're adding $250 billion of GDP every year. That is more than enough to sustain the hopes, dreams, ambitions of whoever, the entire generation. And the secular trend of that growth is something that's super interesting. The fact that, if you look at like the last, say, 15, 20 years, that growth has always been in that ballpark. And that's what gives me the ability to say that, yes, I think there is enough depth in the ecosystem.
So thank you very much. It's a great answer, and you are confident that this level of confidence is going to be sustained,
right,
and hopefully it will increase too. So you are professionally investing,
right,
in founders,
right,
belonging different generations.
Yes.
And how are you seeing the difference between the generations, like the group of people who were born, say, after 1999, and the ones like before that time period? I think you have both sides of the equation, yes, in your investment portfolio. What are the main characteristics and differences of these two generations in your view?
There are a lot of them, but I'll try to maybe give the 2 or 3 which are key. I think the first is just building for India versus building for the world. So for example, a lot of people, a lot of the entrepreneurs are a little bit, who have more work experience, they tend to build companies for the Indian economy. Whereas the young college graduates, like the 23, 24-year-old, and we have those young founders in our portfolio as well, they are the ones who are like, hey, we want to build for the world on day one. And so a classic example is we've invested in this banking software company. It's called Perfios. And it's like pretty much like the go-to banking software company in India. Every bank in India uses them, super high growth, profitable, all the good things. And they spent the first 8 to 10 years of their journey only selling to banks in India, and now they're thinking of going global. On the other hand, I've invested in this company called Pepper Content, which is a AI-enabled content company. And that's the company was started by these 2 young college graduates. They actually started the company before they graduated their bachelor's degree. And their first customers were global. Because they were like, we want to build for the world. And I think that is one big difference. The other difference is and is that the people who've been this new generation, they are a lot more optimistic on their product talents. So the folks at Pepper are like, hey, our product is going to be the best in the world. Like, why wouldn't it be? and I'm not and I'm not saying it's not. I mean, it is. But, the ability to say that when you're 21 versus you have, the founders at, say, Perfios, who are considerably, they've got a lot more kind of, experience. And they were like, hey, we want to build a great product for India. And then we'll make sure it's also great for the world. And that's, that's another kind of difference. So I think that's for me the biggest, there's many other differences. Look, like work experience kind of, brings a lot of pros and cons with it. But I think that's the biggest axis of differentiation, which I find.
That's interesting. The kind of sticking with that point, when you're analyzing an investment, right, a potential startup, there's the number side of it,
right,
and then there's what I like to think of as the EQ side of it, particularly around the entrepreneur,
right,
founder. If you see a deal and the numbers just look great, what do you look for in the entrepreneur, right? So taking out that the numbers, the model, all work.
Yep.
Now let's just look at the investor, right? I think some of our listeners are entrepreneurs, right? And I think sometimes I hear entrepreneurs and it's the business model, and they don't realize, well, actually a big part of the equation is you. Could you maybe talk, and maybe if you were giving some of our listeners advice on what you're looking for in an entrepreneurial, even if you had the best, most disruptive idea,
Right.
what might turn you off? What might turn you on to wanting to become a partner with them?
Yeah, no, I think at this, we mostly invest at an early stage, which is like a seed, Series A, Series B, Series C. Like, the company is still fairly young at that time, and the entrepreneur is everything. To be honest, like the number of companies where we invested in an X business and the business became something completely different Y business later, but the entrepreneur remained the same, because you can change pretty much everything you want. Like you can change your market, you can change your customer segment, you can build a new product. But you can't change your team. I mean, theoretically you can change your team, but that's not why a VC investor would like come behind a company, right? So the team is really everything. And there are a lot of good qualities that I look for, but the two ones which I really, really want to see in an entrepreneur, and I think which I think are super important. One is the ability to attract people who are more talented than you are to come work for you. So one of the tests that I do is that, hey, would I want to work for this entrepreneur? And if I don't feel 101% convinced that I would definitely want to work for this founder, it's always a question in my mind, because like if they can't attract me to work for them, can they attract people better than me or better than themselves to come work for them? Because eventually, I think the number one job of an entrepreneur, of a founder, is to build a team of operators more skilled, more talented than themselves, so that they can make themselves redundant. Honestly, that's the best thing you can do. If the founder can take a 3-week, break and go to like the Bahamas or something and come back and the business hasn't changed one bit, that's really, really strong. And that happens when you can hire people smarter than yourselves to do things that you can do, but they can do it much better than you. So that's one big quality I look for. Can you attract high quality talent? Second, are you humble enough to take feedback? And that's really important, because in every entrepreneurial journey, in every investing journey, in every deal journey that I have done, there are ups and downs. There is no, there's no risk-free return. There's risk in everything, right? And there will be ups and downs. There will be times when you'll get things wrong. There will be times when, a strategy fails. There will be times when you launched a product and it didn't take off quite the way you expected it to. How comfortable are you taking feedback? Acknowledging that, hey, something didn't work. Let's go back to the drawing board. It's fine. We tried. We learned a lot from it. We don't have to feel sad about it or bad about it. But yes, we have to course correct and let's go into that problem solving mode back again. So I think that's the humility of accepting that you will make mistakes and it's okay to make mistakes. So those are two qualities which I specifically look for.
Yeah, it seems like the low ego, right? Is interesting enough part of a good investment.
Yes.
I know I could share it. Actually, I think Volkan, a couple of years ago when we first met, I was looking at a deck and just analyzing the investment, and part of the pitch was world domination was part of their
right.
business model, right? And I get that, but there was also bravado that came with that. That was a genuine part of their business model, and kind of you got to stop and pause what you're investing in when there's too much hubris in the investment, I guess.
Yeah, I think it's and it's going to happen. See, that's people call me pessimistic, but every entrepreneur that I invest in, like before I finalize the investment, I actually tell them that, hey, look, there will be times when you and I will not agree. We'll have the differing points of opinion, and there'll be times, and you will always have the final call, but then there'll be times when you make that final call and you realize it wasn't right. And I promise you, I'm not going to be in the mode of I told you so, but you have to promise me that you'll be humble enough to see what happened and kind of course correct. And that's the agreement that we both come to, because that's so important.
Yeah, I absolutely agree. It's a partnership.
Yeah,
right?
It's a partnership.
You gotta learn from each other.
Yes.
How do you, when identifying risks and creating a mitigation for them. How do you distinguish a real risk and just something like that's not really real, like just a sound? What type of judgment mindset do you have when it comes to identifying risks and developing a mitigation strategy? Especially you are investing using someone else's money, which is a very big responsibility.
Yes.
And how about your risk assessment mindset?
Yes. So the way I think about risk when I'm making investments is so first of all, so when we make an investment, so we, at BVP, we follow this approach called a roadmap-driven approach to investing. What that means is we will first build a roadmap, and the best way to think of a roadmap is it's a thesis but on steroids. So it's literally, for us, it's a map to find the best companies. So we'll spend a lot of time on a space. So let's say I'm looking at, financial software in India. So I'll be like, hey, I'll go and meet say 100 companies or as many companies as I can. I'll talk to industry experts. I'll talk to potential customers, and I'll come back and think, okay, fine. These are the 7 different problems that financial software companies are trying to solve in India. I think these 4 are large enough and real enough based on my judgment. And I think within these 4, these are the 3 qualities that an entrepreneur needs to have, a company needs to have, the pricing model, business model, blah, blah, blah. So I come up with a very detailed framework. And then, by the way, we publish all this, this is all in the public. Mm-hmm. So I've already done that work. So when I'm looking at an investment in that space, I've already identified that, hey, these are the only 4 kinds of companies that I'm going to look for, or the 4 kinds of problems, companies which are solving one of those 4 kinds of problems. Mm-hmm. And so I know, as a part of the roadmap process, I would have thought of what are the risks to this roadmap, what are the risks to investing in this space. So that's one kind of risk, which is the roadmap risk, that, hey, if people just stop buying financial software. And I have already accounted for that when I build that roadmap, that, hey, I think I'm fairly comfortable and, I take that call as an investment manager. But then there are, there's execution risks, and then there's real market risks. There, I think you can never do enough to, as an investor, you can't really do much about them. The honest answer is I can't do anything about those risks. So if I'm investing in a financial software company, I know there is a risk that, hey, one customer becomes so large, they come back and, start, really pulling you down on the price that you're charging them. There's a chance that your product only works for the 3 customers that you have today, but you're not able to scale your technology team to really scale the product. There's a chance that 3 other competitors come up with a newer technology stack, because technology is changing every day, and your team is not able to keep up with it. There's so many of these things, right? But I really can't do anything about any one of them. The only person who can do something about them is the entrepreneur, which is why when I think of any risk in an investment, I always discuss every risk that I have identified with the entrepreneur. I'm like, hey, I thought this is a risk. What do you think? And usually the answer that I'm looking for is that, yeah, I agree that's a risk, but these are the reasons why I think we will not kind of run into that. But if we do, this is what we'll do.
Yeah.
And now, usually most founders will not have as structured an answer to it at the stage that we invest, but directionally, that's what I'm looking to hear. What I'm not looking to hear is, oh, that's not a risk at all. Because,
right.
I know eventually you as the entrepreneur are going to have to solve for that risk. So if I feel that, I need to feel comfortable that you understand this is a risk and you've already thought about it, because eventually that's what will solve for that risk.
On the risk,
yes.
I want to open a different dimension in the topic of risk.
Right.
Indian diaspora members, Indian immigrant professionals, Indian tech professionals.
Right.
I think number-wise, most of them, they live in the US and some in the UK. For them, leaving the corporate ladder and coming back to India to start something new, maybe a very big risk, right, for them individually. What would be your message? I think in our listening audience, there will be a lot of Indian immigrant tech professionals, and who would be very interested in this podcast, in my opinion, this episode specifically. So what would be your recommendation for the diaspora members who may or who are considering coming back to India and starting in India what would be your advice like for them?
Just come. Reach out to me. We'll help you find a job. No, but seriously, I go back to the same question. If you're living in the Bay Area or like, UK or Germany or wherever, like Tel Aviv, Israel, wherever there's a tech hub, the fact of the matter is that none of those tech hubs are growing as fast on a macro scale as India is. And if you're working in a company, most of the value that you're kind of going to generate for yourself, like in pure monetary terms, just looking at that is going to come from your stock options, ESOPs, whatever. The chances of your ESOPs growing faster in India are just so much higher. Mm-hmm. So that's just pure financial terms. I think on a non-financial terms as well, I go back to the thing that you can, problem solving and, entrepreneurship is something that's a lot to do about, it has a lot to do with the context of the local economy and the people in that local economy. And if you're an Indian kind of student who grew up in India, went to study in the US for their masters or whatever, and has now been there for like 3-4 years, yes, you've been in that economy for 3-5 years, but you spent like maybe 20-22 years of your life in this country, and you'll just understand the problems and solutions to those problems so much better. You'll have an unfair advantage if you start up in this country as opposed to if you start up in that country, because if you start up in a country where you lived for 6 years, yes, you can be the smartest person in that country, but you still have at least 20 years less experience of living in that country, of dealing with those problems, of working with people in that geography. And that's always going to be a disadvantage to you. You can overcome it. A lot of entrepreneurs have overcome it. Like, it's totally possible to do it. But if you want to play the odds of you succeeding are just better here because you understand so much more about the economy. And in today's job market, today's economic environment, I mean, India remains the oasis of economic development and growth. Like if you look at what's happening in the US, especially around inflation, all the rising interest rates, all of that, India is still where it was. Like our interest rates, have been pretty much constant. Our inflation hasn't kind of spiked. Our market hasn't dropped 30%. So even at a macro scale today, there is no better place to be than India. And if you grew up in this country, you have such a big unfair advantage when you come back here. You should just come right now.
That's really a great answer.
Definitely a good pitch here. So along those lines, let's talk about deal flow and also in the context of, you just mentioned Silicon Valley versus India, and there's the ecosystems and what they're putting out in terms of startups. There's so much activity going on here, and maybe from an investor perspective, are you seeing more? And I know I'm painting with a broad brush when I use some of these words, but are you seeing just generally more potential unicorns here than you might say in the United States? United States, it's vast,
right?
But what in terms of the potential? Not trying to make account of what actual unicorns are coming out, but the future is where are you seeing? Are there more potential? Is the potential greater here for that unicorn to happen, or is it in the United States still? Or what's your thoughts on that?
So first, I would encourage any entrepreneurs who are hearing this podcast, try and be a centaur. A centaur is a company that's got into $100 million of revenue. As opposed to a unicorn, because a unicorn is with a certain valuation, and valuations are not in the entrepreneur's control. This is just something, and I'll come to your,
No, I like where you're going.
I'll give the answer, but the thing is that the valuation, like, the Fed wakes up and raises rates, and all of a sudden the public markets tank, and the market, revenue multiples are down, and all of a sudden your company is worth less. You really can't do much about it. So don't focus so much on the valuation, focus on the revenue, because if you're, and hence we as a firm came up with this word called, so we said, don't try to be a unicorn, try to be a centaur. A centaur is a company with $100 million of annualized revenue. Because if you have $100 million of revenue, you are probably going to be really valuable as a company. And then, the valuation, that's so external, you can't really do much about it. But coming back to your question, do I feel there'll be more centaurs or more valuable companies in India?
Right.
100%. See, because the way to think about it is the number of problems that need solving in India right now are so much more than the number of problems that need solving in the US. And that's not because there are no problems in the US, but it's just that the US has solved those problems. Like the entrepreneurial ecosystem is so deep in the US, like it's been around for like 40, 50 years. Whereas in India, the entrepreneurial or like the venture ecosystem, especially on the technology side, is maybe 15 years old at max. And so you're still in the early stages of that journey. So there's so many more problems to solve. Hence, probabilistically, there's going to be more companies. There's a higher likelihood that a company that you're investing in here goes on to become a large outcome, because there are many, many more large outcomes that need to be created, that, many real problems that need to be solved here. The other thing is the amount of capital, especially this is more from a VC's perspective, me as a venture capital investor, the amount of capital that's invested in India as an economy relative to the economy size and versus say the US, we're still very underpenetrated on like the venture capital in the economy. There's, there's only if you think of a 10, 15, 20 kind of larger, like a Series C and beyond, there are very few funds still who actually come and play in that space. And so, you have the ability as an investor to pick and choose better companies, or because you have less competition. And I'm not saying that's like, I want more funds to come into India because that gives more capital to entrepreneurs, that levels the playing field more. But as that's happening, we're still a very underpenetrated market in terms of venture capital. So it's better to, I think I agree. There will be a lot more valuable companies created here.
Yep.
One question, we learned here that the most of the capital equity comes from within, like domestic capital in India. So the majority of the investments are actually through the domestic
Yeah, I think
funds.
the number we heard is somewhere between 80 to 85% right now of investors in Indian startups are Indian, as opposed to outside of India.
And with that, I think the Minister of Technology state this to us, and the numbers can change. Maybe it can change the proportion, but it seems that the majority of it is Indian capital. As an entrepreneur, like former entrepreneur, I will say now, maybe entrepreneur in the making again. So we are really very energized and impressed by what we solve in India. But there has been many mentions to us for foreigners coming into India and starting in India. And I will love to hear that more, but somehow it didn't happen. It may be the problems that needs to be solved are very domestic, and we may not be able to understand it. But one thing that inspired what Kostas and I earlier today was we visited Abhinay Chaudhary.
Yeah, Abhinay. Yeah.
He built an unicorn.
Yep.
And right
we
now
invested in that company.
Yeah, and he's right now onto something different. And
correct.
The problems he solved at scale, and we understand they are really important problems, but it seems that the beginning points are simple, simple problems that an everyday person is facing. Right. And how about I'm just really curious, is there room for non-Indians coming to India with their entrepreneurial drive and try to solve similar simple problems, and is there any path for them or any likelihood for them to be successful in India by starting something from scratch?
So I think anecdotally I can think of a couple of companies which have done fairly well. I'm not sure of the exact numbers, but there are definitely companies in India that have been started by founders who are not Indians. But that number is extremely, I can think of maybe one or two. Mm-hmm. And I think the reason for that is, what you said is correct, that the problems in India are so unique to the Indian economy that you need to have experienced them firsthand to really solve for them. So I'll give you an example. When we invested in Big Basket, which is the company that Abhinay he was the founder of, Big Basket is a grocery delivery company in India. Now, we had several other, so they were like with every category in India, there was always competition. So there were maybe 10 other grocery companies which existed at some point, which were backed by venture capital. And a lot of them were being backed by investors who did not have a team on the ground in India. And what we realized was that a common theme there was a lot of people were looking at, hey, how was grocery built in the US? Or if it was, and I believe there was a big company which raised a lot of money, I'm forgetting the name, and then it kind of shut down. And then I think Instacart was the model that really seems to be working. So a lot of people are trying to invest in Instacart-like companies in India. Now, the challenge was that Instacart works where you go, you have Whole Foods and you have, HEB and Kroger and, all these different grocery chains. And somebody goes and picks up the right assortment that you want and comes and gives it to your house, and you pay them a convenience fee and you give them a tip, and that's how they make their money. In India, the problem is there is no Whole Foods. There is no Kroger. There's no HEB. There's no 4 local grocery stores in every state. And so if you ask someone, hey, I want to get these 20 things, they don't know where to get it from. So what Big Baskets was, the reason Big Basket was unique was they were like, hey, we don't want to pick up grocery from somewhere else. We will build the supply chain. We'll go to the farm. We'll go to the farm at 4 a.m. We'll pick up the produce. We'll grade it, sort it, make sure it's in our warehouses, ready to be sent out by 6:37. And you can start placing orders at 7. And our own delivery people will pick it up from our warehouse, which we source from our farms, which we have contracts with, and we will give that to you. And that model was extremely hard to get off the ground because it required a lot more investment. You have to build these warehouses, go to these farms. But that's the model which, if you fast forward, that's the model which is working. And that's because that's such a uniquely Indian thing that I know that if I want a certain SKU, I'm not sure if it'll be in that store. And availability itself is the challenge. It's not about getting it from the store. It's just that, I may not have the exact milk that I want in that store, and I need to find the store which carries that. And the Instacart equivalent business model is just harder because you have to go to 5 stores to find the stuff that I ordered. So now that is an example of the problem being so domestically focused. You can't take a foreign lens to it. That being said, I don't want to sound like I'm discouraging entrepreneurs from other parts of the world to come to India. We are very open to people coming in. But my sense is, if you do want to do that, come and spend some time here, live here, see the problems before you apply a global first solution to the problem.
Or get inspired by the solutions in India and bring it to your country.
That is, I think that's actually happening. So, it's really interesting that you kind of talk about it. I remember one of our investors in the US who also spends some time looking at startups in South America. He's like, hey, so he dropped me an email. He said, hey, I got this pitch from this company. They want to be the Misho of Brazil. Have you heard of Misho? And I'm like, yeah, Misho is a pretty large company in India. It's doing fairly well, I believe. And that was the first instance where I'm like, oh, something started in, and that's it's like a social commerce company which started out in India. It's a very India first kind of a problem. And now people in Brazil, it seems like, are using that as an example aside, and that was really great to hear.
Yeah, I guess it's showing a milestone in the development of the Indian ecosystem. Along those lines is where do you see? We're sitting here in India. What do you see India 15, 20 years from now? But also, what do you see your role in that?
Yeah, so. Look, I think India, if I take a 20-year view, next 2 decades are going to be super interesting, super exciting for India. Depending on which economist you believe, like I said before, 6 to 8% growth, compounding every year. We're probably going to grow from a 3 trillion to a 10 to 15 trillion dollar economy. And I think that's going to happen irrespective of, what I do or what someone else does, because that's just the macro, that's just the country. There's enough people in this country who are moving this country forward. And hence in that context, when you ask me what my role is, it becomes interesting because I'm not it's not like I'm not the one, like I said, whether I'm here or not, somebody else is here to do the work. And hence I think of this more as a privilege to have a ringside view to these companies being built. When we invested, so the first company which I sourced when I was an analyst here at BVP was this company called Urban Company. They're a home services company being built. So they're basically aggregating local service professionals like electricians, plumbers, carpenters, and so on and so forth. And they're kind of organizing them, and they train them. They provide them a lot of tools, etc., and they then those service professionals come to your house and do the service. And I remember when we first met that company, and we were like, so like one of the things that we asked Abhiraj, the founder, was that you realize these are people who haven't really worked in a formal economy. How are you going to teach them or train them to go into someone's house, provide like a 5-star service? And he's like, but that needs to happen if India has to be grown.
Yeah.
Like that is going to happen. And the way they solved it is so interesting. They go so deep. They have the ability to so when they get these service people, they're like, hey, we'll make sure you stay in a good place. So they have deals on housing, on the uniforms, on training, on education, on their kids' education, on like home loans. Like they have built an ecosystem. And so I always think of, if I had the good fortune of sourcing of kind of sourcing that deal, of being a part of the initial urban company investment, and the company continues to go from strength to strength. And I feel there are so many other urban companies which will be built in India. There's so many other people who come from very different backgrounds who will come and say that, hey, something that I as Anant feel that, oh, is that really possible? And then they'll come and tell me, no, but that needs to happen if its vision of a $10 trillion Indian economy needs to be panned out. I'm like, yes. And the ability to have a ringside view into that being created, I just want to make sure that as many people can be touched by either Bessemer or me and can be inspired to do that. That's my role. That's my job. If I do that, irrespective of how the investments show up, kind of turn out, I think I'll have done my bit. And that's the most important role. Just keep giving advice, capital where possible, help, but keep inspiring people to do stuff that they're already doing, really. But it's a unique privilege to be in this position, I think.
Anant, thank you very much for your time. We appreciate learning from you.
No, thank you so much. This was a great conversation. A lot of interesting, questions. And to all the audience who are thinking about India, please come here. It's a great place to be.
Thank you for diving deep with us on another episode of LEHI, Low Ego, High Impact Mindset. Join us every week as we discover the stories, strategies, and insights that will empower you to grow personally and professionally. Stay inspired and catch you in the next one.